Let's look at IAS 10 events after the reporting period. Now to start with, let's have this guidance. Let's say we have a timeline. Let's have this timeline. Okay, let me do it this way. The year end 31st December, let's say 2018, and the financial statement will be published or will be authorized for issue. So financial statement issue, and this would be somewhere maybe 30th or in between April, so you can say 15 April 2019. Now if you look at this timeline, what it is that before the financial statements are issued or are approved for publication by the board or directors, a lot of events would occur after the year end. So you look at from January, February, March, and even some part of April. So part of April, a lot of events would occur. Now these events could affect the financial statement which has been prepared as at 31st December. A lot of these events could mean that we have to tell users about them because they are fundamental to the understanding of the financial statement or the position of the entity. So there are events that will happen between the date of the financial statement and the date the financial statement are issued. So between the reporting date, that is after the year end, and the day the financial statement are published, a lot of events would occur. Now as accountants, it's important that we put in systems in place to identify these events. Now having identified this event, we have to assess the impact of this event on the financial statement which we have prepared at the reporting date. So some of which could mean that we'll have to change the figures that we had at the reporting date. Some of which will mean that we have to make some disclosures for users to understand the financial statement. So on this timeline, we are saying that subsequent events, or what we often refer to in accounting terminology as events after the reporting period. So all these period, all the events happening here, some good, some bad, all of which we're saying that they are events after the reporting period. Events after the reporting period, and they require disclosure, or some will require that we change the figures. So by definition, we're saying that subsequent event or events after the reporting period are events after the reporting period, some of which could be favorable, some of which could be unfavorable, and they occur between the end of the reporting period, and that is key. So they occur between this date and this date. So between the end of the reporting period and the date when the financial statements are authorized for issue. So between this date, these two timelines, all these events occur, be it a favorable event or unfavorable event. So anytime you think of events after the reporting period, think of this timeline. The year has ended, but there is a period before we issue the financial statement, and often within this period there will be audit. So the accountant should gather information relating to all these events and assess their impact on the financial statement. Some will mean there is going to be a change of the figure that we had at the reporting date. Some will mean that we'll make disclosures. So we have two types of events, two main types of events after the reporting period. We have adjusting events and we have non-adjusting events. Now, When we say adjusting event, what it means is that this event require that we change figures that we had. So adjusting. So we'll change a figure. So adjusting means that we'll change a figure that we had at the reporting date. Now non-adjusting means that we are not changing the figure, we are only making disclosures.